So with markets swinging wildly and global uncertainty at its peak, you might be feeling the urge to run for safety. And this is why many investors are turning to cash assets. They're seeing them as a safe haven in these turbulent times. But is cash really the answer? So in this video, I'm going to go over my own cash portfolio, revealing what's working, what's not working as well as I'd hope it would, and why this perceived safety might be in the short term comforting, but in the long term, a bit of an illusion. So I'll cover how I'm navigating this quite uncertain period with cash, but also why it's crucial to understand the limitation of cash assets for long-term wealth building. If you're feeling anxious about the market currently, then you're part of a rather big club. The headlines are filled with shrill warnings of economic downturns and recession and further doom and gloom ahead. And yes, in times like these, the allure of safe cash is undeniable. If invested correctly, it can continue to give returns even when the market upsets occur. But of course, we need to be honest with ourselves. Safety is relative. So today I'm going to show you how I'm using cash to weather the storms of the market, the returns I'm seeing, and most importantly, how cash assets are part of a wider investment strategy. So what are your options when seeking a safe cash haven? Why don't we break each of them down, keeping in mind the current climate of uncertainty? And I'll put links in the description so you can see the best options, the best buys available in the UK for each of these cash options. So starting with cash ISAs, they of course offer that tax-free safety, but do they keep ahead of the pace of the real cost of living? Then there's online savings accounts, easy access with perceived safety, but are you sacrificing potential returns? Then there's fixed rate savings bonds, locked in rates for safety, but what if you need liquidity? Then there's high interest current accounts, very convenient with a sense of security, but are you truly maximizing the returns on your cash? Then there's money market funds. They are low risk, they offer stability, but they do not have the FSCS protection. And maybe you want that in these uncertain times. Now, I've created quite a few videos on money market funds. I'll link some above, and they cover the pros and cons of money market funds. Then there's premium bonds. They are government backed, and there's of course a chance of tax-free wins, but the winnings are not guaranteed and it is a gamble. And there's government bonds. They are also government backed. Now, they sometimes are seen as more complex. And of course, like all savings, you need to consider the potential interest rate changes that might occur in the future. Like I said, I've put links in the video description that take you to the best buys for each of these cash asset savings options. As you can see, each of these options offers varying degrees of safety, but also there is trade-offs. It's crucial to understand the nature of each of these investments and which one, therefore, is best for you. You need to decide. So why don't we take a look at my cash investments, see how they're performing, and it might help you if you're unsure at this moment in time. So let's start with my cash assets sitting with Trading 212. They're simply sitting in a trading account, enjoying 4.3% return at the moment. It was a higher return previously, but it's been reduced recently. I invested £35,000 in May 2024, and that's returned just over £1,500, now meaning there's just over £36,500 in there. Moving to Best Invest, I hold the Vanguard Sterling Short-Term Money Market. This is the income version of that fund. I invested £18,000, almost £19,000 in May 2024, and that's returned about £700, around a 5% return. Moving on to InvestEngine, again, I put cash into a money market fund. It's in the Monday Smart Overnight Return, CSH2. I invested close to £150,000 in April and May 2024, and it's returned almost £7,500, 5.05% return. Now on to Vanguard, again, another money market fund. It's the same money market fund, but the accumulation version. It's a Vanguard Sterling short-term money market fund. And I invested almost £153,000 in May 2024, and it's returned almost £6,500. Moving on to premium bonds, my daughter and I both have £50,000 invested in premium bonds, so £100,000 in total. And since the May draw, overall, my daughter has a total winning since May of 1,900, and for me, it's 2,175. If you combine the two, then it comes to 4,075 over 11 months, which gives us a prize rate draw of around 4.5%, which is well above the 3.55%, which normal luck would normally give you. And of course, the winnings for premium bonds are tax-free, which is an added bonus. I update on the game between my daughter and I on who wins the most from premium bonds each month, and you can see one of the videos above. So when we tally all this up, the investments and the returns, here's the overall picture. So with just under £457,000 invested, I've seen a return so far over the year of £20,000, just over. If I prorata this for the year, for all the investments, it would be roughly around £22,000. So a 4.8% return. Now, considering CPI is running at 3%, we're keeping our head above water with some clearance. Also, when we look at the S&P return, minus 3.3% year to date, and the FTSE All-World return, essentially zero growth, I'm happy to see these stable assets in my portfolio continuing to grow. Now, of course, while cash assets provide a sense of security and may remove or reduce the desire to act impulsively on stock movements, they're not a long-term solution, of course. Inflation, interest rates are still a concern, and the opportunity cost of missing out on market growth can be significant. So cash assets, normally over and above emergency funds, should be part of a wider investment strategy. Investments that you hold for a reason. You do have an investment strategy, right? Well, if you don't worry. I've pulled together a video where you can get a free download. It may help you out. You can see it above. So this brings me on to my 3-bucket strategy. These cash assets form part of my bucket 1. It's designed to provide a safety net during uncertain times, among other things. It's about having accessible funds to navigate short-term volatility. Essentially, it's giving me a buffer against market movements and gives security, especially in uncertain times. Now you can see a link to how I manage those 3 buckets and my investment strategy above. So currently I hold around 4.5 years in cash assets, with about 8 years in bucket 2 and the remainder in bucket 3. So what's the key takeaway? Well, cash assets can provide a sense of security during market chaos, but they're not a long-term strategy. If you're investing over a longer-term horizon, usually 5 to 8 years plus, then cash assets are more likely to underperform equities. So in these circumstances, we should not really let the allure of safety blind us to the reality of inflation and opportunity cost. It's worth remembering that cash is a shield, not a long-term investment. We should diversify beyond cash to build long-term wealth. We should always consider the impact of inflation and opportunity cost. So in the end, it's about finding the right balance between short-term safety and long-term growth. If you're finding these videos helpful, please give a thumbs up and subscribe, and share with someone else you might think will get value from them. And I'd love to hear from you. How are you balancing safety and growth in your portfolio? Please share your thoughts in the comments below. Thanks for watching.